what is the difference between dividend rate and dividend yield on your list
Sure.
there?
Yeah.
How do I know which one to go by picking a higher,
Yeah. Go by
income?
rate. Go by rate. So the rate is
Okay.
the amount of money that it's paying on every share. That's a constant. It's not going to change. It can change. The board can elect to reduce it or increase it, but that's the amount. The yield is the percentage. So for the first glance at a stock you're going to buy, and you're going to buy it that day, you will look at it and say, you know what? So you don't have to figure it out. You're going to look at it and say, it's paying like a, 4.5%, a return. That's pretty good, but all that is a function of the stock price and the amount of dividend that it's paying. So if it's paying $1.20 for every share you own, dividend, which is always going to be the same, whether the share is up or down, it's irrelevant. But it is a function of the percentage of $1.20. What's that percentage against whatever the share price is? And that's where the yield comes from. And it gives you a kind of average of where the yields have been hanging around. So it's really the thing that you need to know as an income investor, because you kind of need to condition your brain to the amount of money. So if it's paying $1.20 a share for every share you own, whether you bought the share at $50 a share, and for every share you bought, it's paying you $1.20. If the share price drops to $20 a share, it's still paying you $1.20 for every share you own. You didn't lose shares. You might have lost a little market capitalization, a little market gain, but you didn't lose shares. Your shares are still the same. So you're still getting $1.20 for every share you own. And the same is true on the upside. And it's why I say for income investors, don't get excited when the stock's up 30%. Just be glad you're getting the same income. Don't get concerned when it goes down 20%. You're still getting the same income. And so if you're truly an income investor, what matters is the check you're getting every quarter or month or whatever. So
when the price drops, then you shift your focus to the yield.
Yeah, right. Yeah. The price drops, and now all of a sudden you got a yield that's through the roof. The stock Phil was just talking about, if you heard, is paying $2.70 a share. Well, the stock dropped. It is $12 a share. That means it's paying a 21% yield. I mean, that's crazy. Where are you going to get 21% on your money? But it's also, when you see a drop like that, you start to get concerned. And I can't get out of the concern until I see their financial statements, because do they have the capitalization or the free cash flow to continue to pay the yield? In this case, I think the company does. And the other side of it is it's extremely undervalued. The valuation on this is way, way low. It is really every bit of a $25 a year, a $25 stock. Shouldn't be paying. It shouldn't be going to 12. And I understand why. There's been a lot of different things that have happened. But, it's so when the stock drops, you look at the yield and say, well, I thought I was making 5%. I'm making, 19%. So maybe that makes you feel better. But the key is that it's the share, the amount of money you get is not going to change. So you worry. And so here's what you got to, you can't buy a stock on that though. And I want to point this out to you. So I say, well, I'm going to buy this stock that's paying $2 a share because the other stock's paying $1. But that the stock that's paying $2 might be $55. The stock that's paying $1 might be $25. So you're going to get more shares for the $1 stock. Consequently, you're going to make more money every month from the $25 stock. You understand? So you can't just look at the amount they're paying per share. You got to look at how many shares you're able to buy compared to a stock that's paying twice the amount per share.
Mm-hmm.
So
Okay.
you gotta look at both of those things. So sometimes you can make more money buying a share that pays $1 a share compared to a share that is paying $2 a share, because you're able to end up with more shares with that. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.